Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing an illustration whereby we'll be explaining how to use the sum of year digit method to solve any depreciation related to it. Let's understand with the illustration which will be mentioned down here. So when we speak about sum of year digit method, we ideally know that the total of all useful life, that means the digits of all useful life is added together, and every year it is supposed to be reversed. That means if the useful life of the asset is 5 years, then the first thing that you need to do is that reverse the order. That means 5, 4, 3, 2, 1, and the total of all these digits, that means 5 plus 4 plus 3 plus 2 plus 1, will give you the denominator. That will be the base, and the numerator will be either the 5, that is for first year, either the 4, that will be for second year, 3 for third year, 2, 1, etc. It goes like that. Now when you have to solve this illustration, you need to understand one simple thing. The depreciation is calculated, or rather the depreciation is subtracted from the written down value. Now how do you calculate this written down value? It is calculated, that means the original cost minus scrap value will give you a certain amount. That amount will be used for calculation of depreciation here. So for example, if the depreciation is coming to somewhere around 8,000 for the first year, that amount will be subtracted, and whatever balance is left is the written down value. However, in case if you've been directly asked to find out the depreciation for the fifth year, so how do you calculate in such cases? So for the first 4 year, you have to see the original cost and the total number of depreciation amount that is supposed to be charged, and that will be used here for solving this illustration. So let's note down a problem and figure out how to solve this illustration. So if you can see, we have mentioned down the illustration here which states that Mrs. Raj and Company rather has purchased a machinery for rupees 1 lakh on 1st of January 2010. Now the scrap value that was estimated was around 12,000, and the estimated useful life was around 10 years. Now the first thing that we have to do here is to ensure that all these 10 years are mentioned in the reverse order. We'll mention down all of them in the reverse order in the working note, and then we'll start with the illustration. We have to calculate the depreciation for the year 2015. That means 2010 to 2014, the depreciation has been already calculated. You have to calculate it for the year 2015. However, while doing the working, we'll be understanding how the depreciation has been calculated from the year 2010 until 2014. Let's figure it out. So if you can see, we have done the first step here, that means adding up the digits of the estimated useful life. If you can see, what we have done here is that we have mentioned the 10 years in the reverse order, that is 10, 9, 8, 7, 6, 5, 4, 3, 2 and 1. Accordingly, we have added the total number of digits that we have, which gives us the total number as 55. That will be the denominator while calculating any depreciation here. Now when you calculate the depreciation further, I have mentioned down the years in Roman number. So if you can see, we have highlighted them in red, which states 1, that is Roman 1, Roman 2, Roman 3, Roman 4, etc., and going further until 10. Now what this denotes is the depreciation year. So in the first year, what will be the count, second year what will be the fraction, third year what will be the fraction further, that will be mentioned down here. So when we talk about reversing the order of all these digits, there was a reason behind it. The depreciation amount or the depreciation factor will be based on this specific fraction itself. Now the first year will be having a base root of 55, that is the base will be constant among all these years. However, the numerator will keep on changing in the reverse order itself. That means the reverse orders that we have mentioned, that is 10, 9, 8, 7, 6, etc., that will be the same reverse order that will be carried forward. And this is the fun of this specific depreciation method where sum of year digit method is used. Now we'll start with the mentioning of depreciation factors for all these years. So if you can see, we have also mentioned the depreciation factor here. Now the further thing that we'll be doing here is we'll be mentioning down all these years right from the date when this asset was purchased. That means 1st of January 2010. So we'll be mentioning down the depreciation year below each of these Roman numbers where the depreciation factor has been mentioned. So if you can see, we have mentioned down all these years. That means this specific asset will be working from 2010 until 2019. Now, the catch here is that they have mentioned that the depreciation has been already calculated for the first 4 years. That means 2010 to 2014, it has been already calculated. And for the year 2015, we have to calculate. So we know that the depreciation factor that will be used is for the year 2015. We'll highlight that depreciation factor. Now this is the factor that will be used here to make sure that the depreciation is calculated. Now when the depreciation is supposed to be calculated, we have to calculate it on the written down value. Now what will be the written down value? As you know that the first few years depreciation has been already provided, what we'll be doing is that we'll be mentioning the total written down value as per 2015. That means as per 2014 it has been already calculated. Let's calculate that. Now if we can see that we have mentioned down all these details, that means the total of the first 4 years, that means from 2010 to 2014, the total numerator and denominator comes to 40 upon 55. This is the exact value what we have to calculate. Now while calculating depreciation under this specific method, you have to use a formula. That means original cost minus scrap value multiplied by the denominator factor, or rather the depreciation factor. So we'll calculate that now. Now the written down value here is 88,000. Now this will be used as a multiplier for the depreciation factor. So the amount of depreciation that has been already subtracted from this specific asset, which is 64,000. So if you can see that for the first 4 years, that means from 2010 until 2014, we have already subtracted 64,000 as a part of depreciation from the cost of the asset. Now whatever is left is the total amount of balance value of that specific asset. That means 1 lakh was the original cost minus this depreciation amount 64,000. Whatever is left is the written down value of that specific asset, or we can call it as the current market value of that specific asset. Now this is required to calculate the depreciation for this current year. Now to calculate the depreciation for the year 2015, we have to use the same formula again, that is original cost minus scrap value upon or multiplied by the total multipliers of depreciation, which is 5 upon 55, which is for the year 2015, as we has denoted the same thing earlier. So 88,000 minus, or rather we can say that 88,000 multiplied by 5 upon 55 will give you the amount of depreciation for the year 2015, that you can add up to the total amount of depreciation which has been already subtracted and figure out what is the written down value or the market value of that asset by the end of the year 2015. Let's do that. So if you can see, depreciation for the year 2015 is 8,000 rupees. Now if you add this to the total amount that we have derived earlier, that is the total amount of depreciation which was 64,000 from 2010 until 2014, if you add 8,000 there, you will get a certain total that can be subtracted from the original cost and will give you the cost of, or rather the market value of that specific asset by the end of the year 2015. Let's do it. So if you can figure out, we have mentioned the market value of that specific asset as of the end of the year 2015, which is 28,000. That means 64,000 the depreciation from 2010 to 2014, and for the year 2015 8,000. Let's highlight it. If you add both of these two together, you will have a total of 72,000. If you subtract this amount of depreciation from the total cost, or rather the original cost of the asset, you will get the market value of that specific asset for the year 2015, or rather by the end of the year 2015. So if you're planning to sell out this asset, you need to make sure that if the asset is sold out for more than 28,000, there will be a profit. If the asset is sold for less than 28,000, there will be a loss, and accordingly you have to adjust that. So I hope this video was very clear in understanding how to solve a sum of year digit method problem and the related depreciation to it. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.